Coal, textiles, gambling and property. As either chairman or director of companies in all these sectors, business chief James Mackenzie spent last week as a visiting fellow at the University of Melbourne, musing on business issues. He says as company write-downs run into the billions of dollars, number crunchers and accounts need a shake-up. I spoke to James Mackenzie earlier. James Mackenzie, thank you for joining me. Now, you've been pretty busy since we last spoke. You stepped down as chair of Pacific Brands, but you're still on the board. Now, Pac Brands reported a $450 million loss last month. Is it really possible to turn this company around?
I think that when you look at Pac Brands and where it is today, you've got to look at where it's come from.
This is moving your production offshore?
Basically recognising that manufacturing 25 or 30% of your product in Australia in a subscale environment wasn't the right thing to do, and moving it all offshore was the right thing to do. And to Sue Morford's eternal credit, she took that decision, and she also took the credit, should take the credit for the decision to reduce the number of lines that Pacific Brands run. Now, along the way, there have been some other headwinds that Pacific Brands has hit, not the least being the change in retail generally, but I think that her strategy is sound and is right, and John Pollaers coming in as Chief Executive is the right man to execute on that strategy, because at the end of the day, unless there's top-line sales growth, there isn't value for shareholders.
Well, as you mentioned there, the board has decided now to replace Sue Morford with John Pollaers. Now, he's ex-Foster's. I noticed he said the other day, he said, "My sense here is the same. It's about making sure I'm focused on building this business, Pac Brands, and making it as strong as it can be. So when these kinds of choices are put their way, the shareholders' way, they're in a much better position to make this choice." I mean, to me, it sounds like a strategy of making the company attractive enough so that the board can actually sell it.
That's not the strategy. The strategy of Pacific Brands is to generate top-line sales growth, and that's what you'll see John focusing on. If someone comes along, and we all know that KKR came along and had a look at Pacific Brands early in the year, I'm sure the board and John will do the right thing by shareholders and have a discussion. But the price is going to be a price that unlocks value for shareholders.
Another CEO change under your watch, where you are chair, is at Mirvac, and it appeared from reports that investors stroke analysts were quite upset by the removal of Nick Collishaw, who seemed to have done a very good job, and replacing him with Susan Lloyd-Hurwitz. There was quite a tense lunch with investors reported. How did you handle that?
I think that analysts and shareholders obviously have a right to ask questions when changes are made at the top. And after all, regardless of how we look at the board's role in this extended analysis of what corporate governance is, environment that we all live in, the most important board of a role is to hire a chief executive and to tap a chief executive on the shoulder and tell her or him it's time to move on. Now, by the very nature of those changes, it's not as if they should be ventilated publicly before the market's advised. We live in a very good continuous disclosure regime in this country. My job, and as chairman, was to make myself available to answer the not unreasonable questions that analysts and shareholders had.
But on the face of it, it would seem that he'd done a pretty good job. I mean, is it a change in culture? Is it a change in how REITs are perceived now in terms of investment? Or
Chicky, the property sector is a very important asset class in the Australian investment environment. The baby boomers are moving to retire, and in those circumstances, they're going to be looking for annuity type returns, especially with the disruption in investment markets in recent times. They're going to be looking at annuity types of returns, and annuity types of returns come from investments in property securities and fixed income securities. I think it's incumbent on all of us in the property and property security space to get our house in order to meet the inevitable demand for our products going forward.
You talked about how we've got good disclosure rules in these companies, but of course the recent reporting season revealed, I think the Fin Review's got a report in today, an enormous amount of write-downs and impairments.
I don't think that's that doesn't indicate a problem with our continuous disclosure rules. What it might indicate, and I say this with a modicum of trepidation, it might indicate a problem with some of our accounting standards. And I think the impairment standard, something which most directors are very familiar with, is probably due for a little bit of a review, because if you look at the Fairfax write-down, the Fairfax impairment write-down, and the associated headlines with that, did that distract from the work that Greg Hywood is doing to rebuild that business in a modern environment? You know, to my way of thinking, it probably did. And I think that those who are responsible for the accounting standards could probably have a little bit of a rethink on how that impairment standard works.
Can I ask you one on China? You're now one of two new deputy vice chairman of Yancoal, and you're also on James Packer's Macau casino company, Melco Crown. Now, both markets, coal and gambling, are a lot softer at the moment.
I think this is all relative rather than absolute. China is not even half urbanised, not even 50% urbanised. And so therefore the demand for iron ore and coking coal, the global demand for iron ore and coking coal is going to continue. Maybe not at the same pace as it has in recent years, but and that's reflected in pricing at the moment. Well, my view is that the Chinese government will smooth the urbanisation program. There'll still be demand for iron ore, there'll still be demand for coking coal, and commodity prices will sneak back up next year.
And what about the gambling market? Because I've heard that has actually got softer as China has come off a bit.
Well, you've got to look at the size of Macau compared to the size of any other gaming market in the world. The growth rate might be off, but the amount of money that's going over the tables is not down appreciably. And as a proxy for the Chinese economy, it's probably a very good indicator about how strong it is.
And James, finally, do you have a view on how your beloved Hawks are going to go towards the premiership?
We're in there, we're competitive. It's very un-Hawthorn-like to be cocky, but I do think we'll win this Friday night. Geelong's another thing.
James Mackenzie, thank you very much for joining us.
Thanks, Dickie.